This is a download from BFM 89.9, the business station.
Good morning, George. We saw the conclusion of the CES event in the States over the weekend, and many announcements actually came out, including the fact that Microsoft is going to come up with a $29 phone. What do you think is the impact on Microsoft as well as the Asian ecosystem for such a phone?
Good morning, Julian. Well, short term, I think it's going to be quite positive for Microsoft, and it really is a very good intermediary device for customers who are just beginning to access mobile data. Nokia has always had the reputation of building well-made, affordable handsets that appeal to hundreds of millions around the world who can't afford the full-fat smartphones. And Microsoft seems to be supporting this. The product you're talking about is the Nokia 215. It does cost $29. It is aimed at emerging markets. It's very good as an intermediary product because it offers 29 days of battery life on standby, a dual SIM option, built-in torch, FM radio. There's also, it offers an Opera Mini mobile browser and a limited array of pre-installed apps, but for a limited, it's Twitter, Facebook, Messenger, and Bing search. I mean, it's pretty complete. So I think it's going to increase the availability of Internet access to more of the world, and I think it's a good intermediary device. But longer term, Microsoft is going to have to come up with a more sophisticated product and will have to compete in a much higher traffic part of the business. But this is a very good product, and I think for the short term, it does expand the availability.
Well, we saw Xiaomi actually coming into the space of cheap phones, and this price by Microsoft certainly goes below that of what Xiaomi is offering, and Xiaomi has actually made a lot of money from it. Do you think that Microsoft can make a lot of money from this phone?
I don't think so. I think there's going to be competition, as you say. Xiaomi is already there. I think there's going to be increasing competition, and I also think that the audience is going to start to transition away from this step into a more robust availability. So I don't think it's a longer-term option. It does keep Microsoft in the game, and it does expand what Microsoft is offering. So there are some positives to it, but it is going to lead to increased competition, and that there will have to be other products to take over.
And with the strength of Xiaomi, actually, they have not actually expanded into the U.S. market. Do you think that lawsuits will again emerge as kind of a strategy to prevent such emerging players from to expand their market shares?
Well, Xiaomi, I'm very fond of Xiaomi. I've been watching them. The valuations are currently now are frothy. Yes, they're based on their current products, the market acceptance, accelerating trends of margin expansion, deceleration over their product cycle. But last week, the infusion of $1.1 billion U.S. was a very strong complement to the most valuable in the most valuable kind of way, real hard cash, and it was done by some of the world's leading investors. The head of Xiaomi has been called the Steve Jobs of China, and he walks and talks the walk, and he's very similar not in terms of when Steve was involved, but recently he had a good audience, and at the end of the show, he had the words "one more thing" appeared on the large black screen behind him in very slender white letters. It was very much the way Steve had introduced new products at the end. I think Xiaomi is going to be a much more predictable long-term winner of the evolution of the Internet, and I think companies that have a longer-term perspective, Xiaomi is only 5 years, someone like a Microsoft is going to be very hard to be able to adapt to the changing environment. So one of the big changes, though, Julian, is legal action. Legal action will play an increasingly significant part of the technology landscape, more so than when Steve was changing the three sectors of the then much more diversified world of technology. Imagine the consequences of Hewlett-Packard not basically letting their technology be used by Apple. That would not happen now. There would be legal challenges, and this legal battlefield for technology control has become much more worldwide and universal and subject to greater political implications that have nothing to do with the attendant circumstances of the technology involved. So yes, this is going to be Xiaomi's and other new companies' challenge. It's something new, and unfortunately it's going to involve a lot more than just a technology challenge.
And the other company that featured in this CES was, of course, Samsung, who says that all their products will be internet ready by 2017. Is this enough to get them out of their recent share price doldrums? And, of course, is the Internet of Things upon us?
The promise of their ability to transform will be enough to keep the company going for now, but it's going to have to deliver. Samsung needs to transform its historic business. Smartphones, for the third quarter, sales from smartphones represent half of its sales, but had a 15% drop from the prior year. Once handset sales decline, it's clear what happens after that is the declines accelerate and take operating margins down with them. And Samsung's mobile division operating profits fell 60% in the third quarter versus the third quarter of 2013. Now, the preliminary fourth quarter results that were announced just a couple of days ago, last Thursday, reflected only a 37% drop. So that's good. The rate of decline is decelerating. But that's not enough. It's going to have to make a conversion. And the Internet of Things is upon us. It is a possibility. The fact that it's going to be Internet ready within 5 years, that's a very good step in the right direction. But it's going to have to deliver. I mean, the Internet of Things was one of the three emerging categories of focus in the CES over this which ended this weekend. The other two being wearables and connected cars. Now, this is a real possibility for Samsung, and it does have the ability to deliver, but it's going to have to.
Now, Dodge, we have a minute left. Could we get a quick view, what your view on Korea as a whole? I mean, Samsung is one of the biggest stock on the MSCI Emerging Market Index, and they were also recently announcing some restructuring to unravel the complex cross-holding. So what's your view on Korea?
I'm positive on Korea longer term, and from a technical point of view, the country is going through a period of wait and see. It's got a lot of challenges to face up. But Asia itself is going to have the ability to come into a regional unity, and I think that Korea is going to benefit from it. We're watching, obviously. There were reports that it lost out in the Thai rail deal-making, but it's still in talks with Bangkok about possible projects. So I think it's going to get more involved across Asia, and I think it's going to be one of the major players. Several stocks that we're not positive on now are Egon Industrial and Hwasong Industrial, but that's short term. We suspect that the Korean market is going to come out of its stage 4 and start rising in stage 1 in the second quarter of this year.
Thank you. That was Dodge Dolan, Chairman and Chief Investments Officer of Lander Infused Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.